Hello everybody, welcome to TraderMerlin Show. It is your Friday edition. Cheers everybody. Hope you had a fantastic trading week. Ready for an exciting weekend, and I'll share with you what I'm doing with my weekend near the end of the show. Anyway, I hope all went well. We've got a solo show today, just me on set. I say set, me in the office at my house, but you'll probably hear a doorbell ring here soon because that UPS driver says he's on his way. Anyway, yeah, I'm glad you guys enjoyed that graph. I was supposed to take a drink. Hold on real quick. Some real good, actually, Northern California bourbon from my neck of the woods called Redwood Empire. Probably one of the more unique whiskey bottles out there. I like that one. Anyway, with regards to the action today and what I posted for my full screen piece here with a cat in the hat, you know, people have asked me a few times what my thoughts are on it. And like, look, I think that we are become a very overly sensitive era. We're way too sensitive on every single thing. And if you look at the past, if you look at when Dr. Seuss was born, 1900, 1904, or something like that, it was a different time. It was a different era. And I think, I mean, this is my personal take, and I don't like to get too political or anything like that, but history is there to teach us the mistakes that we've made and also what we've done good, just like our trading is. So if our trading is bad, we need to look back, figure out what was bad, fix it, and then don't make those same mistakes going forward. You know, with regards to what happened with Dr. Seuss and stuff like that, not happened to him, but the publishers of it pulling some books, I have to question whether it was actually intended because they felt that their content was inappropriate, because to me, it's history. That's fine. Let it be and learn from it. But it might have been one of the greatest publicity stunts that they've ever done for that publisher. Now, Dr. Seuss books are the #1 bestseller and flying off the shelves. So I thought I had to do something. Yes, as he says, everyone gets a trophy. No, if you lost the game, you lost. Go back and cry yourself to sleep. Practice so you win the next game. Anyway. Oh, Tesla. Yes, we'll talk about Tesla today. That's been an exciting one. The Tesla straw broke. I've been waiting for that one, and it finally starting to happen. All right, let's go into our markets overall here. I want to revisit something we used to do in the past. I'm going to try to bring it back here a little bit on Friday just because I know you guys like the analysis. I'm going to start off by looking at the overall trading week. I'll start with go from worst to first. The NASDAQ was pretty brutal this week. You can see right here on the NQ futures, if you go from close to close, you're down about 2.02% on the NASDAQ. Now, as bad as that is, and as bad as it has been for 3 weeks, really, we're down, I'll give you the exact amount for 3 weeks. It's 2.02% for the week, making it the worst from the sectors I look at. If you go to where it opened 3 weeks ago, we're down 8.5%. So it is definitely a nice little pullback here, a little bit of a correction, but I don't think it's anything that dramatic. I mean, it's nothing yet that's noteworthy or should be worried about. I actually felt like we would drop a little bit more on this NASDAQ and get down to maybe the 11.9 because that's where that next big area of demand is on the weekly chart of the NASDAQ. But that was your worst performer by a very close margin this week. Nipping on the heels of that was gold, which continues its slide. I mean, it's been, again, 3 weeks straight for gold. Although I like the prospects of gold going forward a bit better than I do the NASDAQ. Again, I think that if inflation does rear its ugly head, you'll get that flight back into gold. And I do believe next week we have CPI numbers on Wednesday that might start to show a little bit more inflationary pressure. Now, you guys may have seen it this week where Jerome Powell was saying, look, I'm concerned about inflation. Yeah, you know why? Because you're printing so much friggin' money. It's bound to be there. Plus, you have rising interest rates. It's setting up to show some inflationary pressure. Not that we're going to see inflation 10 times normal on Wednesday with CPI numbers, but that could be a little bit of a pop to the upside. So the concern here is if we really do start to get inflation on it, then gold might actually start to have a little bit of a bounce. So I actually I sold some puts, not on GLD, but actually on silver today, and also a little bit on technology. I know that's kind of a risky one because technology is really what's bringing that NASDAQ down. But anyway, wanted to share that with you just to show you some trades in. And I'm out of my S&P and my Russell short puts as well. So went flat there and sold some calls, or sold some puts. All right. So on this gold, continuing on, gold was down 1.72% for the week. Really, it's showing no real signs of weakening or getting any better. I know that there's some demand levels coming up. Brendan says 1650. If we break this weekly up into a daily, you'll see that better zone. I'll show you guys. Go to the daily here just so we can look at that. And, there is a spot down lower, which, right for me, it's 1643. Like 1640 would be the mark if I was to be looking to be a buyer on this one. I think 1650 is, obviously just before you get to that area of demand, but I would probably let it go a little bit deeper because right now the trend feels real weak. But yes, I do think that that's a great point for this to potentially be moving to the upside here for gold. But all in all, it's not a pretty chart. I mean, the weekly really tells us a big story here, which is out of the last 6 weeks, it's only had one up week, and that up week was very little, like maybe 1 or 2%. Other than that, it's been a pretty significant sell-off for gold, and I don't see that stopping until we get down to those demand zones around 1640. All right, moving up the list, it was kind of surprising. You had the Russell 2000 actually tied with the 10-year at a negative 0.38. So what's noteworthy for me about the Russell, which is normally very volatile, it has evidence that this week, a very volatile week. You can see really long topping and bottoming tails on that Russell 2000. All in all, a tiny little red candle, which really doesn't say too much about it, but you do have these long topping and bottoming tails, which really is a sign of indecision, and also you have high volume down at the bottom for the past 2 weeks, which, again, when you guys might revisit the session I did on volume and how that can drive price and kind of confirm price, I believe we're starting to see that. We're seeing the sell-off with more volume, meaning the conviction is in the sell side here. We'll have to wait and see how this pans out over the next few weeks, but it is certainly starting to pick up momentum. Russell and the 10-year, here's your TY. This is the price of the bonds, which means yields are rising yet again today. You can see that big rollover on the weekly. It's been a 5-week slide for that 10-year today, ending the week down 0.38%. When gold hit, Tom says, when gold hit 1650, buy a pinky ring to go with the lounge lizard. I'm not a jewelry person, right? I'm not a big jewelry guy. But I'll buy a pinky ring just for you to make it happy. All right, keep moving up so we can get done with the wrap up here of the week. Even though you had a 2% update for the S&P today, it didn't finish the week that strong. It was slightly up, just up 0.76% for the S&P 500. It looks the best out of it. Why? Because it doesn't have the heavy tech influence, which I think was bringing down, obviously, the NASDAQ. So looks the best of the bunch for the week, up 0.76%. Now, the volatile big daddy out here, the Bitcoin chart, which of course has the best ticker symbol ever if you're trading the futures markets, the BTCH21, finishing the week at 49,405. And I say finishing the week, it's not over. Remember, crypto trades 24 hours a day, 7 days a week, never stops. Bitcoin's up 2.27%, but on the week, it was up 6%, 6.84% to be precise. The weekly chart doesn't really tell you much other than it's got a ton of volatility. I prefer to look at this on the daily, which feels like we're basing. We're starting to form a little bit of a base, showing some demand and really slowly supporting prices. So this is actually, for me, pretty optimistic and positive for crypto going forward. So hopefully we can can you post that volume stream somewhere? Which volume stream were you? Oh, the volume show. Echo. I think if you go to the TraderMerlin and YouTube channel and just go to my channel specifically and type in volume, I think I have a show. It's like using volume or something like that. I can find out for you after. It's kind of tough to do this live and do all that stuff, but we'll definitely get you the link to that one. All right, so that is your main market overview of what happened out there. Clearly, Jerome Powell and the Fed are center stage right here. I also got a ton of messages from you guys saying, how dare the Democrats try to push through this bill. You guys might remember, you go back a few months, it was the same thing on the other side of the table where you had the Republicans were trying to push through a bill that had all kinds of crazy stuff in it that just made no sense, and now the Democrats are doing it. This is just what politicians do. Wouldn't it be nice if we actually got a $1.9 trillion COVID Relief Act where they did this? $1.9 trillion divided by everybody who is a paying taxpayer in the United States, and that was the check. That's all that was in it. Unfortunately, just a small portion of these bills goes in because, let's face it, I apologize for cursing today, politicians are thieving assholes. They are going to do whatever they can to move their own agenda and not benefit you and me. So, that's unfortunately the bottom line. And let's look at it this way, guys. This is going to sound horribly condescending, and I apologize, but this is definitely how I feel. If you're worried that a $1,400 check or a $1,000 check or a $2,000 check is critical to you making it through to the next month or making it through the year, then you got to grind harder. You got to go get another job. You got to find something to do. And I know we all have circumstances which might be very difficult and challenging, medical conditions, whatever, but we really need to keep pushing so that when you hear about these check payments coming through for $1,400, you need to look at it and go, well, I'm not getting it because I don't qualify. I'm already outside that bracket. To me, that's where we should all be striving to get to. Politicians and bankers, the most vicious scum of them all. Yes. And they're a necessary evil, Brendan. Unfortunately, it is what it is. We just have to suck it up and play their game, but know the rules of the game along the way so we don't get caught. Okay, and again, if you have questions, feel free to type those into the question marks at the beginning, just so I know. I'm going to go and go through a couple questions. Now, surprisingly, a lot of the questions were about cryptocurrency. So I'll walk you through some of the things. I actually did a couple interesting pieces with my crypto accounts here recently, which I'll share with you guys as well and let you know how that's going. Okay, first question. This is from Brandon. Not Brendan, who is with the audience today, but the first one is from Brandon. He says, I got an email about Ethereum 2.0. I'm holding some Ethereum right now. Do you suggest to upgrade to Ethereum 2.0 or keep it as ETH? What is the risk that ETH will drop after ETH 2 is introduced? I see that there's a wait list. Okay, so basically what's happening is you're getting a technology upgrade. It's called a soft fork, not a hard fork. A hard fork is where the chain splits and you get two separate currencies. That's what happened with Bitcoin and Bitcoin Cash. That was a contentious hard fork. What that means is one group of developers said, I want it this way. Another group is saying, we want it this way. We're not going to agree. We're going to make separate chains. In the case with Ethereum, what's happening is there is a consensus that we need to upgrade the system to remain competitive. So if you're holding ETH, there's a fundamental change that's going on with Ethereum. It's not small, it's massive. They're going from proof of work, which is miners, to proof of stake, which are called validators. Basically the whole engine is changing on the way that the Ethereum token is emitted, or we'll call it mined. They're going to call it minted going forward. So what's interesting about that is you have a change in the way that Ethereum is being done. It's being done amicably, meaning the developers are saying, okay, everybody agree? We're going to switch from this system to this system. That's what ETH to ETH 2.0 is. You don't have to do anything. So if someone's telling you have to do something, you don't have to do anything. Your coins will migrate over once the transition is complete and that new infrastructure is in place. Keep your coins at Coinbase or wherever you want, even in your private wallet. It will migrate over to that new system. Now, if you have a hardware wallet, Nano Ledger, Asset Trezor, you may need to transfer it through a mechanism, and I'll cover that if and when that happens. But if you hold it at Coinbase or on one of the exchanges, they will automatically roll you into Ethereum 2.0. Now, I think what that email is referencing is what's called staking. You guys might remember I did a show talking about miners in Bitcoin. Ethereum, or proof of work, will now be using, after this transition, what's called proof of stake. So before you had miners competing to solve blocks of data, they're rewarded with Bitcoin and fees. Now you have what they're working on is a system where it's basically somebody like myself says, I'm going to put up 32 Ethereum, and that's my quote-unquote stake. And I will be elected every now and again as a validator of a transaction, meaning instead of a miner solving a block of data, those that paid to be stakers, like myself, I will get a chance to solve a block of data. I get the Ethereum reward, and I also get any fees associated with it, right? So that's the new transition from this everybody using massive computing power and competing to solve a block of data to a collective network of people who have a stake in it, and they are rewarded for validating blocks. I'm hoping that made sense to everybody out there. Did it make sense, everybody? I hope that was clear. Now, you can, if you want, become a stakeholder in Ethereum. Right now, it's 32 Ethereum to be a stakeholder, meaning you have to commit 32 Ethereum, which, that's quite a bit of money, and you now could be getting rewards just like a miner. It's a possibility. Now, let me walk you through a couple things. And if I'm losing people, type it into chat. Let me know if I'm losing you right now, because I know this is some stuff that it's kind of like learning a foreign language. Some of the people in this room are very well versed in cryptocurrencies and understand it, but if you don't understand it, gotta let me know. So you've got proof of work, which is Bitcoin's system and Ethereum's right now, and Ethereum is trying to go to proof of stake. Now, you might notice on certain platforms, if you're using Kraken, for example, if you go to your Kraken platform, you can simply click a button and stake. So for example, I am a staker in Polkadot. So Brendan brought Polkadot to my attention a while back. I recently bought a bunch of Polkadot, and I selected to stake it, meaning right now I'm on the system as a validator for the Polkadot network. I'm rewarded for doing that. I'm rewarded at 12% per year on whatever I contribute. So if you contribute 100 Polkadot, it's the value of that at 12% per year. That's a hell of a rate of return. Now, my plan was to hold Polkadot and keep it for a long time. So why keep it on a external device like a hardware wallet? I would do that only if I was just wanted to let it sit there and never do anything with it. But what I'm working at here is keeping Polkadot at the Kraken exchange, which is where I hold my Polkadot. And also, while it's there, stake it. I'm leaving it there anyway, make an extra 12% per year. That's the plan I'm doing with certain ones. Now, here's where it gets very, very tricky, and I'll look at the questions in just a second, but I got to make this point. With Polkadot on Kraken, and there's a list of different ones you can stake on Kraken. I'm not sponsored by any of these guys, okay? So do your research and do your own due diligence. With Kraken, you can instantly remove your stake. So let's say I have my Polkadot in there, and I'm staking it right now. So present moment, I have a good amount of Polkadot. I'm staked, meaning I'm going to be gaining interest on this or payments on this every day. If I want that back, I simply claim it back, and I can do with it what I want. Here's the catch. So for those of you thinking about doing this with Ethereum, be very careful. I have not staked my Ethereum. Here's the reason why. Now, they'll tell you can get between 5 and 17% per year for staking Ethereum. It sounds great. But with Ethereum, once you stake it, so let's say I take my 32 is the minimum if you're going to stake for Ethereum. I take my 32 Ethereum. I now select to stake it. I submit it as it's now staked. I cannot take that out. I cannot take it out until Ethereum 2.0 is rolled out. My worry is this is still a brand new technology. They haven't done it yet. So I'm a little concerned that if I stake Ethereum, that I may actually have a problem. What happens if that system crashes? Do I get my Ethereum back or is it lost? I don't know these things. So I'm actually being very skeptical and not staking with Ethereum. I'm using other cryptocurrencies to do that. Okay? All right, let me see what questions I got. Are there other pure proof of stake networks that let you participate and get rewards with a very low minimum? Or there are, yes. There are several others out there. And even on Coinbase, you can get, not necessarily for staking, but they will pay you interest on certain ones. Kraken Exchange allows me a few that I could stake, and so I'm taking advantage of that. Oh. Way to go, Brandon. Mr. Wendell. Such a comedian out there. Good to have you with us, Brandon. Are you coming on next week, buddy? I know we're going to talk about having you or another guy on program next week. Let's see. You can get a good return on investment on Ethereum by using lending and DeFi instead of staking. Correct. So if you guys remember, let me see if I can bring this up here. I'm always skeptical about showing my accounts to you guys, but you know what? Why not? It's already done. I'll show you here. So BlockFi is one of those organizations that just pays interest. So this is not staking. But basically, if you keep your cryptos in an account like BlockFi, and there are other ones, somebody else asked me a specific question about another company I'll get to here in a minute. If you're holding these cryptocurrencies, so you can see here you got Bitcoin at the top, Link, Ethereum, Litecoin, the USD coin, you got several others, they'll pay you interest. So right now, I'm keeping under 2.5, because if you go over 2.5 Bitcoin, you only get 3%. If you stay under 3, sorry, I'll say it again. If you stay under 2.5 Bitcoin in this account, you get 6% interest. If you go over 2.5, you only get 3% interest. So I'm keeping under 2 Bitcoin here, so I get 6% interest on it, and that's going to be paying me monthly. So what's nice about this is I'm a long-term hodler. I'm going to hold cryptos, particularly Bitcoin. I think that we're in it for well over 100,000 and possibly much, much higher than that. So I'm going to keep that one. That one I've written off as never getting rid of it. Why not make an extra 6% on it? Now you might notice here on the Ethereum's link, you could be making 5.25% on your Ethereum. So instead of leaving your Ethereum sitting in your Trezor or Coinbase or someplace that's not going to pay you for it, you can leave it here and make an extra 5.25%. So that is called the DeFi, right? That's basically saying I'm allowing the bank to lend out my money in essence, and I want to be paid for that. Instead of you getting your 0.05% to keep your savings account in a bank, which they're making money off of you, these guys are kind of splitting it, and you're getting a bigger chunk of the money that they're making off of you. So that's why I'm a fan of these types of DeFi institutions and organizations, right? That to me is a pretty important piece. But that 5.25% here that Ethereum is paying, that's not staking. Staking would commit and lock up your shares. This is just a deposit. You can move it anytime that you like. What else we got? If you got questions, again, put a question mark behind before them. Okay. What else do I have? No questions that came through? If you get chosen, how do you solve the problem? ML says, if you get chosen, how do you solve a problem? You're not even solving a problem. It's basically the network is alerted that this person will be solving a block of data. The network goes, okay, it's all done behind the scenes. So you won't even really know that you solved a block of data other than you're being rewarded. Now, I think what is happening with the way I'm doing it on Kraken, I believe this is the way that it works. Normally, if you were to do staking on your own, you're waiting for you to be selected as a validator, and then you get the reward. I think what's happening with Kraken is they're pooling the assets. So they're doing a bigger stake, and then once it pays out at all, then they're giving a piece of that to everybody proportionally for what they contributed to their pooled stake. I think that that's what's happening. Not 100% sure, but I believe that's the way that it is. Good, Thomasina. And look, I don't want to make this sound like, hey, you've got to go out and get crypto. But, I'm happy that you are learning along the way and getting more informed with it. At some point, my guess is you probably will want to. I think it's nice. It's fun. I mean, it's a very volatile world. Like, you've got to be able to tolerate some serious moves out there. So it should definitely be risk capital. But there's been some great swings on just about everything recently. ABC Market says, could Bitcoin also move to staking? Would this solve the energy consumption problem? Great question. Such a great question. It deserves a sip of bourbon. Okay. Could they? Yes. Will they? No way. No way. They're stubborn, right? The developers, Bitcoin Core, they don't really want to change it. They're like, this is what Satoshi wanted in the beginning. We're not going to modify it. Now, they're making tweaks, but it's very difficult to move that ship. And they are on a proof of work network for Bitcoin. There's other ones that have spun off, tried to change the protocol. You have Bitcoin Cash, Bitcoin Gold, all these different Bitcoin derivatives off of the original one. They're not going to change it. The good thing about proof of work is it creates a much safer type of network. Now, yeah, I do agree that it's using way too much power. I wish there was an easier way to do it. Like maybe for every IP address it's mining, you could be capped at a certain amount of, hashing power. They're not going to change. That won't fix it. But I do like Ethereum is saying, we see this as a problem down the road. Maybe regulators come in and say, no, you can't use this kind of power. And that could choke out the Bitcoin network. Not choke it out, but change the dynamic of it, because people would just move to other areas of the world and certain areas would become better hotspots. But no, Bitcoin will not change to proof of stake. They're going to be proof of work, and that will be until this thing ends. They're a very stubborn group. If you follow the crypto world, Bitcoin Core doesn't want to change anything. Echo says, Andy, couldn't you just join a stake pool for Ethereum? Yes. However, if you're joining a stake pool, it's part of a pooled asset, but you can't pull those assets out. That's the only scary part about it. If you want to stake Ethereum, go for it. I have not. I've been a little bit too nervous about not being able to get my money back out. And also, what happens if the proof of stake concept doesn't work or the technology doesn't roll out properly? It's just too much of a risk for me, so I'm basically not doing it. All right, Brendan, are you teaching class in here, buddy? Come on. You know what? I've heard about the new Stanford Pi, but I don't know much about Okinola. I will look into that, and I'll dive. Maybe be one of my projects this weekend. I'm gonna probably go up to the mountains and search around for a place up there. But I might spend some time and get to know that Pi project better. All right. So everybody okay with the understanding of staking? Why Ethereum staking to me is a little bit dangerous, but I do believe that there's plenty of opportunities for staking other cryptocurrencies. There's plenty of opportunity. My business smarts guy tells me that it's almost too good to be true. Like, you're going to pay me 12% to keep Polkadot sitting on this exchange? Okay, like, duh. I was holding it just to get the appreciation of price. Now you're going to tell me I'm going to get 12% on top of that? Hey, bring it on, baby. And by the way, on the Polkadot that I'm in, I will also be paid in Polkadot. I'm not paid in cash. I'm not paid in dollars. I'm paid in the native currency. So to me, this will actually compound even more. Brendan came here to learn about cryptos, huh, buddy? Awesome. Good to have you with us, my friend. Koja says, but as what I understand, that more than 60% of Bitcoin are stacked or stored. Here, and again, that number is subjective. What I will tell you this is it's very high. I mean, there's a lot of people like myself. You talk to Brendan here, and I got to make sure we've got Brendan and Brandon here today. So Brendan, he'll respond right away to this one. He's keeping his Bitcoin. Under no circumstances is he going to get rid of it. Like, you probably would have to pay him $100,000 right now, and he'd go, okay, I'll do it. But other than that, we're both holding. So I've got my external ones on my thumb drives because I'm keeping some on my Nano Ledger S. I've got a couple over here on BlockFi. I've got some hidden other places. Not hidden, stored other places. I'm not selling. You're right. When you have an asset class that has 21 million max ever, right now we're at 18 million, and estimates are that between 3 and 6 million have misplaced their keys, meaning that's gone. And let's say it's 4 million. Now you're talking about there's only 14 million in circulation right now. And if, let's say 50% of those, so 7 million, are stored and no one wants to sell those, that means everybody who's buying right now, Elon Musk, Saylor, Twitter, anybody else, they're trying to buy from that pool of 7 million. That supply and demand ratio is completely screwed. I mean, this is an economics lesson 101 in supply and demand. Not only is supply dropping, it's dropping incredibly quickly, and demand is going where? It's through the roof. So to me, it's a perfect storm for a bigger upside move in the crypto world. What potential black swan do you see with regards to Bitcoin? Great question. With regards to black swan, here's what I see potentially happening. And I'll leave it at that. I'm working on some things right now trying to prove my theory. But I believe that there is a way that you can get into Bitcoin addresses. Now, I know that SHA-256, which is the algorithm, is protected and all that. I'm not trying to go through the front door per se. I'm going through the back entrance, and I believe that you can ultimately steal cryptocurrency out of these addresses. If I can prove that, that is actually viable, I will let you all know ahead of time. I will do a show on it first before I make any big press releases, because that would give you the opportunity to sell all your Bitcoin and then go short everything that you could possibly find that could be short Bitcoin. Because if I can prove this, if I could prove that at any moment, without you knowing or doing anything, your Bitcoin could be taken out of your account and moved somewhere else and disappear without you knowing, what would you do if you owned Bitcoin right now? I'm curious. I want you to know that one. What would you do if you found out that accounts were mysteriously evaporating Bitcoin out of it and moving someplace else? Would you want to hold Bitcoin? Even if you keep it on a paper wallet, a Nano Ledger S, a Trezor, Coinbase, it doesn't matter. If you found out that those were disappearing, would you want to hold Bitcoin? I can tell you this. I sure as hell would not want to have an account with that. So if I can prove this, which will take me some time, I'm working on it literally right now, it's running. If I can prove it, don't you think that everybody and their mother would sell? Like Elon Musk would go, oh shit, unload it all. So Bitcoin would be back at pennies in a matter of hours as soon as the whole world found out. It would be crazy. Yeah, I know, Brendan. Brendan says Bitcoin futures margins are only $99,000. It's way too much. I wouldn't do it with Bitcoin futures. I would find other mechanisms, other vehicles. And what's crazy about this is, and I almost thought about writing a movie about this. I think it'd be crazy. Do you think that it would cause a systemic failure? So look at companies like Tesla and MicroStrategy. Tesla's got $1.5 billion worth of Bitcoin. If all of a sudden you could prove that you could crack it and steal, everybody in the world would be selling. There'd be no buyers out there for Bitcoin. Their value of $1.5 billion investment would be at zero. And all of a sudden Tesla would crash, which would trigger more selling. MicroStrategy, same thing. They've got $5 billion worth of Bitcoin. All of a sudden that's worth zero. That company implodes. To me, this is crazy to think the movie implications of a systemic failure of Bitcoin. Of course, this is way, 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 way down the road. We'll see. Big Ed says, isn't there something better that you can do with your time? There's always something better I can do with my time. But think of this. If the technology, what I'm thinking of works, you could theoretically just steal people's Bitcoin, right? I don't want to do that. I'm not a thief. I don't want to take anybody's Bitcoin. But if I can prove that your Bitcoin could be stolen, then all of a sudden I have to think of how could I capitalize on it. So I would be shorting Tesla big time with call options. I would go so deep out of the money, these things would be pennies. I'd short MicroStrategy. I would probably short the equity market. I mean, I would literally go short across the board because I believe it would create a systemic failure, a systemic problem. So it's crazy to think that could potentially happen. Now, we'll see. And again, because you're fellow loyal listeners and viewers, I will make sure to do a special show on it before I record the video showing it working and sending out to every news agency on the planet. The Big Short. It will be one of those things where you're just like, oh my God. I mean, literally watching your no one would want to buy. And here's the funny thing. Talking to a friend of mine about it, he was like, well, go on to these leverage cryptocurrency exchanges where you get like 10 to 1 or 50 to 1 leverage and just sell because you can short there. And I'm like, you understand that if this actually worked and Bitcoin went down to just pennies, those cryptocurrency exchanges would disappear. They would fully implode and just be gone. So that not only would I lose my initial investment, but I get nothing out of it. So you got to go with the central exchanges. Got to go with those central exchanges like the CME, like the New York Stock Exchange, like the NASDAQ, which will be there to support you. Henry, you want me to go to... Henry says, I got to read this. This is pretty funny. In a more serious tone, would you elaborate on one of your favorite trade setups, the one that you refer to with the heavy accent, the gift of God? Given what happened with Dr. Seuss today and the racist overtones of the books that were written back like before slavery or during slavery, I can't do that because now someone will say I'm racist because the accent that I use, right? I mean, anyway, maybe I will in just a second. Correct. Baldhead B says short GBTC. That would be one of my prime candidates. I would load the boat short GBTC with every single thing I had. I would also be seeing if I could find some options on it. I don't know if the GBTC options, but we'll worry about that bridge when we get there. Just know that I will let you guys know first so you have the opportunity to capitalize on it because it'll be one of those things that will turn your portfolio from, 50 grand into several $100,000 in a matter of minutes. IM News says, I don't think technology could crack crypto encryption. I'm not looking to crack the encryption. There's some, I'm not going to tell you exactly what I'm doing. I'm not attempting in any way to crack SHA-256. I believe that's impossible. Okay? Oh, thanks, Alan. So GBTC. Maybe we need to push to get options on GBTC here soon so we can have a vehicle to just load the boat short on. Cool. All right. I know who you're talking about, Henry. Let me go through, make sure I get the list of questions because you guys all asked a bunch of questions. I want to make sure I get through those, and then I'll try to answer that question for you. All right, what else did I have? Here is this question that's similar to what we talked about with the interest-bearing accounts. Ken says, I was wondering what your thought of Celsius Network for earning interest on cryptos. I see they have a U.S. presence. I'm using BlockFi as well, but don't want to keep too much in one place. Very valid points. I think that's a good statement. I'm worried about keeping too much there as well. Now, I brought up Celsius, which is this one here, and I haven't looked at them. You notice that they're going to pay you 13% interest for Tether. They're going to pay you 6.2% for Bitcoin, 6.35% for Ethereum. Again, that's per year. So, for me, this is, it's the same thing as BlockFi. I just don't know about the credibility. I haven't heard much about them. They may be fantastic. I would certainly do my due diligence and dig as much as I could into the web and see if I could find any dirt on them. It looks legit. Bottom line is, you said it's in the States, and let's see, contact. Where are they based out of? It's important for me that they got to be in the U.S. So you got Tel Aviv, Jersey, and London. So you have 3 offices there. So you're in Hoboken. Love Hoboken, nice place. I would probably feel okay with that. Spread it around a little bit, but. You're going to get different rates. There's another one called Nexo, and I think it's Nexo, N-A-X-O. Is it Nexo? Yeah, Nexo.io. This is another one. And be very careful with this one. This is in Romania. And again, nothing against the Romanians, but again, you're not here. Notice here, let me see if it shows the earn on crypto. So here's their rates for crypto. So they're going to pay me 8% for Bitcoin, 12% for Tether. What else? How much for Ethereum? 8% on Ripple, 8% on Ethereum. So they're doing the exact same thing. It's just they're based out of Romania. So, for me, it's like I want to make sure that it's going to be based in the U.S. But yes, I like the thought of spreading it around. Right? I think that's a very good thing to do. It's a little bit too risky to keep all your eggs in one basket, that's for sure. Brendan, you can private message me. We'll talk. I think you might be able to figure it out too. Will they find out who Satoshi is if he uses his Bitcoin? ML, that's a great question. What's that? I gotta reposition myself. So Satoshi in a perfect world is one guy, right? It's one dude. I don't believe that it is one person. I believe, some are saying it's the cypherpunks. I've got a conspiracy theory here in my brain that tells me it's like CIA type stuff, right? They created this to test the system out, see how it works, get people hooked on it, and then, throw us around as they'll usually do. What we do know is that there are addresses that are associated with Satoshi. Now, if those moved, people would know about it right away. I guarantee you there's people who have alerts that says if this address moves even 1/10 of one Satoshi or any Bitcoin value out of there, set an alarm. Because they want to know where it's going. Because that might help people track who Satoshi is. And bottom line is, do we really care who Satoshi is? I love this unknown aspect to it. To me, it's fascinating just thinking, who was it? Who came up with this brilliant idea? Not only the idea, but actual implementation. No double spend, peer-to-peer transfer, emission curve, all that stuff. I find just brilliant from a math perspective. So I like to let him live on as it's one guy, and he's this big rock star. But people are watching those addresses. If they move, then they would be able to potentially find him, right? You'll find out if it moved from one address to another, and then everyone's going to dig into where's that address? Is it where can you track it? So yes, you could potentially. Be careful out of Jersey City. I don't know. You might want to, we could probably check the address there. Let me see. Let's do a little bit of sleuthing here. If you know anybody in Jersey, have them go check out the building. To be honest, that sounds stupid. I'm not really joking here. If you look at the video I did for OTA a couple years back about ICOs, initial coin offerings, they're like an IPO but for crypto. We actually found a company that had a physical address and it had all these employees and it looked legit as hell. I did research. I dug. I took the pictures of the ICO people, this chief marketing officer, chief technical officer. They were all people that worked for a boarding school in London. They were literally their employee pictures from a boarding school. And the address, I didn't check if it existed, but this whole thing was a giant fraud. Somebody set this up, took a whole bunch of money and disappeared. So you be careful. I would probably have somebody check out where they're at and look at the building, at least make sure it's legit. All right, let me see. I'm going to try to bring up the address here. Because, we have technology now where I can. So it's, here's the address, 221 River Street. So maybe you want to go to, check them out here. Bring it up. We'll go to Google Maps. Check it out. Regus, the Regus building. I don't know, where's it at? Apparently this is the suite. Be careful, I don't know what I'm going to get here. Apparently this is it looks like a cafeteria. Del Frisco's Grill is at that address. So maybe there's other buildings on the floor, but other than that, it looks like it might be in Del Frisco's Grill. Kind of a red flag out there. I'd be a little bit cautious. All right, anyway, I won't spend time on that. Let's see, what other questions do you have? I asked you what you've been saying. Les, I'm not ignoring you. There's so much chat going through. You got to understand, I'm trying to do a show, come up with original thoughts, because, I'm reading a teleprompter, of course, and switch the show between 3 monitors and field all the questions. So I got a few things going on in my brain. I didn't see you, Les, ask a question with question marks in front of it. That's how I would know it was a question. I didn't see it. So ask it again, and I'm happy to answer your question. I'm definitely not trying to get away from it. Why are we looking at restaurants, Sava? It was just because somebody asked me about a specific DeFi firm called Celsius Network. And it's a very similar company like BlockFi or Nexo.io where you deposit your cryptocurrencies and they pay you interest. And I was like, be careful, just check them out, make sure that they're legit. All right, further right in the Hudson. Okay. Let me go to more listener questions, and Les, I'm waiting for your GBTC question. All right, here's another one. Of course, another crypto question from Dave. It seems to be crypto show today. Dave says, you mentioned before that you don't like Binance. I love Binance. I think Binance is great. I'm just a little apprehensive about having money in an exchange that is not US based. So I totally get that, but I'm curious how you feel about just buying on Binance and moving coins to cold storage right after. I'm looking for a place to buy altcoins and I'm considering using them. Your thoughts? Dave, love it. That's a great, absolutely. It seems like a great way to go. It's just keeping them there on that exchange is can you get your currency out? That's the challenge. I've been trying, I've had an account issue. I can't log into my account right now, which kind of freaks me out because I have a lot of Cardano sitting over there and I want to kind of move that one out. So I have some issues with the accounts and their response times. It's taking me some time to get there. But if you want to open an account there and then just transfer out, absolutely, to do it on cold storage. Yep. You know, the interesting thing is, I don't know why everyone is deciding to all of a sudden pay all this interest for me to keep my cryptos there, but it's an incentive for me not to keep it on cold storage. Like, I really don't want to keep my crypto on BlockFi. I don't want to keep it on Coinbase. I don't want to keep it on Kraken. But they're allowing me the ability to earn interest on it. Well, that just kind of makes sense for me to do. How is a blockchain profitable? Well, it's not the blockchain itself. It's the projects that are tapping into that blockchain. Now, keep in mind, there's so many different types of blockchains. You've got confederated, you got consortium, you've got private blockchains, you've got public blockchains. So they're all designed to achieve a different goal. When we look at what the Fed coin will be on, that's a private blockchain. Only one person will have, actually my guess is it will be a consortium. It will be the banks, the big banks will have access to that, but you and I won't be able to access that blockchain. Bitcoin is open source, so anybody could access it. I have a full node running here, so I'm basically being part of that Bitcoin network and running the network. How do people make money on it? It's the projects from the blockchain themselves. Like, what is the project doing? What, like for Ethereum, for example, Ethereum makes money with gas. That's the fees being charged to use their network. If you look at something like Cardano or Ripple, there's going to be transaction fees associated with it. So the blockchain is simply the data storage mechanism to store all the transactional history. It's not necessarily that blockchain makes the money. It's the technology that's using that blockchain and what is that technology or blockchain being used for. All right, I'm looking for Les. Where was Les? I didn't see you respond back, Les. Where's the question marks, buddy? Tells me I'm avoiding him. All right, let's see. Les, would you be willing to create a list of your top 10 cryptocurrencies? Yeah, of course. I'll try to do it off the top of my head. And there's a lot of them that I like, but like my portfolio consists of, my dog's out barking outside. Number one, Bitcoin. To me, that's hands down number one. Actually, let me just look at my list of accounts on my phone because I have so many. It helps if I have a list in front of me. I keep a portfolio account on my phone. Bitcoin and Ethereum, those are the top two by far. I think that at some point you may actually see Ethereum pass Bitcoin. And again, remember, they're two totally different things. Bitcoin's that store of value. Ethereum is a program. It's the spine that holds all these other pieces coming off it. All these projects are attached to Ethereum. Litecoin I like as well. I like Cardano, Stellar Lumens, which is XLM. EOS, and the main reason I have EOS is because of its transactional ability. That really is what it's all about for me with that, is I want something that can do so many transactions that a firm will look at it and go, you know what, we're going to use the EOS network for our payment system. And I think once that happens, and I don't know why it hasn't happened. You guys have seen, I've shown you, there are so much more transactions happening on EOS than any other network. It almost feels like you could take every network and combine them, and they still wouldn't match EOS transactions in one day. So I don't know, maybe they got bad marketing or I'm missing something. I'd love it if somebody could tell me why. Maybe I'll try to get EOS on to explain it. But I put Polkadot on the list because I like the concept, I like the project and what they're trying to do. I have Ripple. I would put it, if it's going to be in my top 10, it's number 10, right? It's the last on the list because I just think that from a payment system, FedCoin's going to do away with that, right? You'll have Ripple trying to be the payment system for banks, and then here comes the Fed and goes, hey, we've got our own system, so we don't need you. I think that's exactly what happened. I think Ripple showed their hand to the Fed, here's what we can do, here's how it's going to improve your system, blah, 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 and then all of a sudden, the Fed's going, well, why don't we just take the code or create our own, and I think that's what's going to happen. So I'm a little skeptical on Ripple right now, long term, but right now I think it's fine until the Fed drops. What else? I like Monero from a privacy perspective, but I think that's the biggest threat. I think that Monero will probably get shut down because it's a way to very easily hide hide things. You know, that's a very cool technology with ring signatures, and I won't go too deep into it, but it's a way, if you want to remain anonymous, that's the one to use. That or Zcash, or anything that uses ZK Snark. So to me, that's it's a cool technology. I'm not a nefarious character. I'm not, I'm not a drug dealer. I'm not trying to do things off the book, so I'm not worried, but I think that if you hold Monero, the potential is the government's going to look at that and say those ones should be shut down. And last one here is Dash. I think Dash has a lot of potential. They've got a great network. They got a great community. They have a thing called the treasury. So a percentage of the mining rewards goes to what's called the company treasury, where they take that and they'll invest in the infrastructure and buildings and advertising and employees, even things like sponsoring teams or doing a show. That's all paid for out of the treasury. So they've built the ecosystem to help them grow as well. I think that's important for a lot of these companies, because in most cases what you have is people who've created it, like Dan Larimer. I saw Dan's comment come in here. Dan Larimer is one of the big guys at Stellar Lumens. He was also at EOS, and he just recently left. This guy's got tons of tokens and coins. So basically he goes, starts a project, gets a big chunk of the action, and then leaves. Well, how does that help overall? So, to me, having a treasury type system is really, really cool. All right, let's go. It says, finally being serious. I'd asked about GBC being the possible way to get into cryptos without having to go off the Thinkorswim for a trade. Yes, absolutely. Yeah, no problem. I think GBTC is a great option, excuse me, for getting the crypto space. The only problem I have with it is if you plot the price of GBTC against Bitcoin, you'll notice it does these huge swings. So there will be moments where you're paying a huge discount, or you're buying it paying a huge premium. And I think if you're going to be using GBTC, and I think Tom is doing this right now, correct me if I'm wrong, Tom, you're playing those swings. You're saying, okay, I don't want to pay this big premium. I'm going to wait for that premium to drop to zero, or actually collect a premium and buy it at a discount. That is, I think, one of the keys to trading GBTC, and it's I can tell you right now, we did the math. We created that little formula here, which we've shown on the show many times. Let me get rid of Del Frisco's. I don't know. Del Frisco's. Looks like you're making me hungry over here with Del Frisco's. All right, so here's full featured chart on TradingView, and I'll scroll down here, and this is the formula. So right now, oh wow, that is the biggest discount I've ever seen on GBTC. Right now it's at almost a $5,000 discount right now. That is pretty good. That's a big market timing piece. So if you're thinking about buying GBTC, now would be the time, right? There you go. And I love that you guys got it all here. I've never heard of anybody else talk about buying GBTC at a discount based off it. And I don't know how I just came up with this. I just stumbled on it. But you can see historically, anything above this blue line means you are buying it at a discount. Anything below it means you're paying a premium. So there you go. That's it. Not only is it a discount, that's a huge discount. It might be the biggest discount you've seen ever on GBTC. So, damn it, wish the market wasn't closed. I might go out there and load up on some GBTC. Yeah, there you guys go. So if you open a TradingView account, it's free. I mean, I use a free account here, but if you guys notice on the upper right-hand corner, it says watch list and you have a little plus. If you type in what Tom just did, which is you type in GBTC times 1,000 plus BTC USD. Yours is backwards to mine. Let me try yours and see, because I think yours is probably the right way to do it, but I did it the other way. GBTC, we'll do times 1,000, and then mine is BTC USD. Okay, so add that one in. So you got pretty much okay, yours is the opposite. So this is the way it should be. Yes. So to leave it to Tom, he made it even better. He took what I started and made it better. This tells you how much of a discount you're buying it at. So there you go. That's the better way to do it. Yes, yours was right. It's funny because I was thinking about when I made it. I was like, okay, it's inverse, but I was just so lazy. I was like, I don't care. I'll just keep it. But this is the way to do it. It's so correct. What I'm going to do is I'm going to delete my original one. So there you go. Thank you so much, Tom. All right, what else do I got comment-wise for the show? But I guess it makes Bitcoin and Ethereum. Me only really into Bitcoin and Ethereum is who is to say that some other altcoins will be the new hot coins? Exactly. And unfortunately, you just never know. This is the challenge of the entire crypto space, is you just don't know which one will be next. I read something, I don't know how true it is, But oh god, somebody was saying, the Dallas Mavericks guy, the owner, was going to now accept Dogecoin as payment for season tickets. I don't know whether I heard that somewhere, and I'm like, okay, well that's interesting. He does not talking about Bitcoin or Ethereum. He's saying you got to use Dogecoin. Again, it really boils down to this: whomever becomes the most accepted, and again, that's going to be to me social media and people pushing it into society. Whichever one of these becomes the most pushed becomes the most accepted. And whoever gets the most accepted will be the one that sticks. So as much as I think Dogecoin is an absolute joke, it might actually be something to it. And by the way, I found my access to, I told you guys I had an Exodus wallet, and I couldn't find my keys, and I finally figured out the passwords and all that stuff. I had 12,000 Dogecoin sitting in there that I bought at a fraction of a penny, so that was nice. It's always nice when you turn on a little app and you're like, oh, well, that's a nice little present. I guess I'll go buy a brand new TV or another bottle of whiskey for the collection. All right, what other questions you guys have? Yes, Mark Cuban. What other questions you guys have? I'm going to wrap up here. There isn't really anything on the economic front or the earnings front for next week. Today was rather boring from an economic perspective, except for unemployment number. Okay, I got to say that was a little bit better. We were 0.1% better than expected. 6.2, I think, was the number that came out with for unemployment number today, so not bad. All right, what else do I got? Let me show you this, and then I'll wrap her up because I'm going to try to get out of here before 1 hour because it's a beautiful day here in Southern California. Okay. Economic counter-wise, you see for the U.S., there's nothing going on for the U.S. There is a bit for Japan. They have GDP numbers, household spending, cash earnings, machine tool orders, and things like that. But none of the announcements on Monday. Maybe if you're trading the pound, you have Governor Bailey will be speaking, and that could be a market mover. And the only one for the U.S. is 30 minutes into the trading day with final wholesale inventories expected to stay the same at 1.3%. Oh, yes, we were going to talk about Tesla. Thank you, Tom. See, this is what happens when I just ramble on. Let's go look at the old T to the SLA. This might beg the question of where is your buy point on Tesla, right? And, I mean, it's down almost 50%. It's a pretty significant drop. And initially, when we were talking about it, it was like, look, if we break below these levels here and get a close below 780, that's your short point where things are broken. Now the question is, where does it ultimately bounce? Now, there are some demand zones I like. My favorite one is a bit lower. It's going to be right around this 500 mark. I think that would be a good buy point in Tesla. It's still really risky to me. Really risky. I don't know. I just don't see Tesla being that much of the juggernaut in the vehicle space. Of course, I know it's a technology company, but that's pretty much the only spot that I would even consider buying. You could go out there and sell some puts on it right now if you wanted to and probably collect a nice premium at 500. Market's closed, but let's just see what that might get you. I'm curious to see. Let's see. You get 2 weeks out. Buy Tesla when its PE is 15. Yeah. What price would that make it? I can't do the reverse price, but I'm sure that's a long, long ways away. Let's see. I'm going to bring up TSLA, and let's go look at... I do just ramble on. Plus, Brendan, it's whiskey. I got whiskey on the brain today. It's my Friday. Here is your option chain. This is going out for only a couple of weeks. Now, I know it's going to be tough because the market's closed, but you'll get a ballpark idea of it. We're looking at the 500 strike price here. Jeez, look at all the strike prices. This is crazy. 500 would put you right here. You could be collecting $11.25. For every one that you sold, you collect $1,000. If I'm not mistaken, that's 2%. That's for 4. So you could get 2% rate of return for 13 days selling these 500 puts. And basically, if it falls to 500, you would be owning Tesla at 500. I don't think that's such a bad deal. It could be dropping. I think it could continue to drop. Yeah, Batista says 420. That would be very appropriate for Elon Musk, which, if you notice, is also a decent price point down here. Very close to the origin of that gap. But those are just two things you could be doing if you wanted to be a buyer of Tesla. I'm not wanting to be in the buying Tesla category. I think it still has more room to go to the south side, but all in all, it's been a really ugly week. Again, you gotta love it. You add Tesla to the S&P 500, and ever since you added it, it's gone where? It's gone just pretty much down. So that's it for Tesla. I know you like the hour show. Oh, am I gonna make it an hour? Coach's last question. Some platforms have BTC USD. What is the difference between BTC USD and BTC? Well, BTC is the futures contract, right? So BTC is, if you notice here on the right-hand side of my screen, I've got BTC. That's the Bitcoin futures, which is why you guys heard me cracking up, because right now the symbol for the current contract symbol is H. So it's BTCH21. So in the trading world, everyone's calling it, they're saying they're trading the bitch contract, which is kind of funny. But if you go BTC USD, you're now looking at what spot market. So this is how, this is a spot price, meaning this is kind of, if you were to buy it right now, that's the price you're paying. The BTC is the futures market, so that's going to be slightly different. But remember, there is an expectation in the future. That's the whole point of a futures contract. So people are speculating on what the price of Bitcoin might be in, July, August, September, whatever the month expirations are. It's in the future, so it's generally different than the current price. Brendan says Tesla can come down to 400. Yeah, sure. Tesla 95% auto and revenue. But it's not a. It's just a revenue and. Okay. Well, you hear so many people say it's a technology company because of the solar and the batteries. So I could see both points. To me, it's a car company, but we could split hairs on that one. But either way, I just think it's still way overpriced. Okay, so like 24 tomorrow. Are you talking about Tesla? No. All right. It doesn't be acquired before it hit 20. Absolutely. You kidding me? There's no way Tesla would make it to 24. No way. It would be acquired long before that. They'd have some major problems. Yeah, Alan says self-driving is their golden goose. Yeah, but there's a lot more people jumping on that bandwagon right now. You're seeing that self-driving technology really start to proliferate other car companies. What's interesting, I saw a great video about a company out of San Francisco. I can't remember what it's called. One of the big challenges has been batteries. And this car company, basically the car drives on. Basically, you go to a swap out station, and in 10 minutes, they'll take your dead batteries and give you a whole new set of batteries. And you just, like a drive-through oil stop almost, you just pull up on the thing, swap out your batteries, and you're good to go. This type of technology, I think, is going to continue to get better and better. And then you have car companies that's their whole focus is simply driverless cars. It will be there pretty soon, guys, where you can go out with your family and friends for the weekend and have a few too many drinks at the restaurant and go, I'm just going to have a driverless car pick me up, or call your car to pick you up. All right. And I think Medic writes Neo, I think that probably the best way to trade the whole thing is buy an ETF that has a bunch of the car makers in that space as opposed to trying to pick one. Well, Alan says battery swap doesn't make sense. It might. In a city like San Francisco, it certainly would make sense because, you've got short distances to go. There's probably going to be 4 or 5 swap stations. If you're living out in Texas, it might be a little more challenging because of the distances you have to go. But in a city, it probably can work out pretty good. All right, last one for Echo. He says, can you explain GBTC times 1,000 minus BTC USD? So if you look at what GBTC is 1,000th of a Bitcoin. So GBTC. The price of this is 1,000th of a Bitcoin. So you see it's $43.80. Well, it's Bitcoin's trading at 43,800 in theory. So it's actually not. It's trading at 49,000. But that means this is paying you're buying this at a discount. Why? It's 1/1000th of a Bitcoin. So you basically, the formula is you take this, which is $43.80, times that by 1,000. And that's the price that Bitcoin should be trading at. Well, to find out the premium or discount, I subtract Bitcoin from that value, and that tells me whether it's a premium or discount. That's it. 2 minutes. What do you think about Arrival? I don't know about Arrival. Are you talking the car company like Rivian? I know about Arrival. It's a specific company. Our last one, I got to go. What about Ford stock? Looks good. Higher highs, higher lows, uptrend. I mean, Ford looks good. It's kind of weird the way this thing shot up from sub $8 to 12. I think that's a colluded effort there, but it all looks pretty good. If you look at it from the weekly time frame, this has been a marvelous run for Ford. Little topping tail on the weekly candle here, but all in all, it looks decent. I don't know if I would be wanting to buy it right now based off what you see with the daily. Do you draw a trend line across these most recent lows, or do you use some moving averages, or do you buy at demand zones? That's up to you. But all in all, I'm optimistic for Ford going forward, not because of anything else other than just their price is continuing to move to the upside. Yes. Okay. So it's Rivian, not Arrival. ML is asking electric Rivian. Amazon is buying some for deliveries. Forgot what the stock symbol is. Rivian isn't there yet. So Rivian doesn't have a symbol. You have, I think it's Ford. If I'm not mistaken, Ford and Amazon are in Rivian. And then Nikola was supposed to have GM, but that didn't work. I'm actually a fan. I love the Rivian. The only thing that I would do is the day I got one, I would swap out those hideous headlights. I think that they are absolutely horrible. So, NVIDIA. Okay, fine. Last one. You guys stop pushing me to an hour. It's already an hour. Damn you. Okay, now this is an interesting one. Here is NVIDIA's price chart. And you see this real big sell-off from over 600 down to around 470. Today you have a hammer formation. Now it doesn't have climactic volume, but this tells me that there's a potential for a reversal in NVIDIA going forward. Now, anything can happen. Obviously, you're fighting the trend because it's been aggressively to the south side, right? It's been a real steep fall here to the tune of, let's get the exact percentage, from peak to trough, you're looking at a sell-off of 24% in 17 days. I mean, that's Bitcoin type stuff move there. So the candlestick formation that happened today on NVIDIA, on the daily, I like it. I think that this actually has a potential to have a nice move up. But really, all you have to do is just move your line to the top of that candle and say if it breaks 502, then go long. There you go. Yes, we made it an hour. Damn you guys. Oh, ML, is Arrival different than Rivian? Okay, I'll look at Arrival. I've never heard of that one. I knew that Amazon and Ford were working with Rivian, which is just a different one. Okay, cool. 61 minutes. I gotta go. You guys are killing me. I gotta keep this show going on and on. Right now, I have no guests scheduled for next week. I will see what I can do this week about getting some guests for next week. I'll do that over the weekend, but hopefully we'll get some great guests on. We had a really great week this week. I hope you guys enjoyed some of the people we had on. Bob Dunn and Frank from the Small Exchange. That was pretty cool. We had some pretty good stuff. Also, Steve Vandermeter. That was really interesting on the Tuesday show. Is it Tuesday? Monday? I'm losing track of the days. But anyway, had a great week. Hope you guys enjoyed what went on this week. Of course, Koja, thank you so much. I'm going to go out and have a drink from that this weekend. Thank you for the contribution. Appreciate that. Anyway, I hope you guys enjoyed it. Again, if you have questions, comments, feedback, want to know more about something, let me know what those questions are. You can email me at TraderMerlin@gmail.com. That's the easiest way to get a hold of me. Of course, leave feedback, thumbs up, that type of stuff. Love it. Have a fantastic weekend, everybody. I will see you on Monday. Take care.